On the 12th of August 2021, Zambia went to the polls in what can be termed as a historic election, which saw the emergence of United Party for National Development leader Hakainde Hichilema emerge as Zambia's 7th president. You're watching the Zanaco post-election economic review with me, Wenson Mavoro, and I'm joined by Dr. Patrick Chileshe, who is the head of economic research at Zanaco PLC, and we will be delving into the impact that the just ended pause will have on Zambia's economy. Doc, thank you for joining me.
Thank you very much, Wenson.
All right, so Doc, now that the election is behind us, the excitement, the euphoria and everything, what do we expect from this new government and what impact are we expecting?
Thank you very much, Wenson. Best thing, I think we need to congratulate ourselves for making yet another milestone in our democracy. Zambia has moved to the next president, the 7th president of the Republic of Zambia, His Excellency Hakainde Hichilema. Now, when you want to delve into what we expect to happen, there is a lot of factors that you look at. And this did draw me to two important publicly available resources. The first one is the speech, the electoral speech by His Excellency HH, and also the manifesto for the incoming party, and trying to see what does this mean for Zambia. And when I look at, for example, his speech did create a lot of confidence in the market out there, and we saw the market almost immediately reacting. We saw the kwacha appreciating, and it has continued appreciating. Now it is trading below 19 kwacha per US dollar. And then when I looked at the bigger document and where we expect to draw quite a lot of policies, which is the manifesto for the UPND, and what I saw are three critical things. When you look at the manifesto, which talks about the party aspiring to reach a middle-income country by 2030, and they have three phases in which they want to achieve that. And the first thing is there is the issue of recovery and stabilization. That is the first phase. We have the second phase, which is steady growth, and then we have the takeoff. So now, how do they want to achieve this? In the first phase, they go ahead and actually mention that they are going to go for trying to reduce the fiscal deficit. They also look at economic stability. They are also trying to restore market confidence in the economy. Now, from an economist perspective, what kind of policies do you drive from these objectives? The first thing is, one, we are likely to see the new government trying to tighten monetary and fiscal policies. Remember, inflation now is running at around 24.6%, not really a desirable level of inflation. So we really need to start looking at ways and means of trying to rein in inflation, make the macroeconomic environment stable, and that is going to spur more investment. And one very important thing that I picked from the president's first speech was actually trying to ensure confidence in the economy and also bring back foreign direct investment into the economy to try and accelerate the pace at which the economy is growing. So other things that we anticipate to see is an acceleration in terms of negotiations between the government and the IMF, because then that is going to even accelerate the restoration of confidence in the economy. And with that acceleration, we could actually see quite a number of economic variables falling into place, stabilizing the macroeconomic environment, and also giving a push to private sector players to move into space and try to create even more jobs. The other thing that the president also did mention, if you remember, is a debt restructuring, which is very, very cardinal. Debt restructuring, because at the moment, the country is heavily indebted with limited resources. It is very difficult for the country or for the country to service its external debt sustainably. And the best option I think that could be on the table is what he mentioned. We need to go back to investors, talk to them, and try to see how best we can get a win-win situation for both Zambia as well as the investor. Remember, the investor, the money that came to invest in Zambia's Euro bonds, these are pensioners' money in other countries. They wouldn't want to lose everything. So what we need to do is we need to sit down with our offshore investors, discuss with them, find a win-win solution, and then try to put our house in order.
Doc, you mentioned something very, very important, and that is the speech, which, you know, has attracted quite a lot of commendation from different stakeholders, both local and international. But quickly, before we get into, you know, something else, do you think that the speech on its own, as you talk about engagement with, you know, creditors and other relevant stakeholders when it comes to Zambia's fiscal governance, do you think the speech will also, or has also played a part in terms of instilling confidence?
Very, very important. Let me just mention one thing. Even when it comes to financial markets, and more so importantly, the foreign exchange market. The foreign exchange market is the most sensitive part of the financial market, and it does react to information. And the president's speech could have been one of those things the market was reacting to. With that positive vibe, we saw quite a lot of offshore investors almost suddenly change their view about the country. I think there's a lot of documents circulating on social media now. There's a statement from JP Morgan Chase, which was actually encouraging more and more investors to come back into the Zambian market. And the reason being that, according to their assessment, the biggest was the political risk. And everyone was saying this election is going to be one of the most violent. And unfortunately enough, it didn't turn out that way. Zambia being a peaceful nation, we had a peaceful transition. The new president was giving a positive vibe about how he's going to run his government, how he's going to keep the government efficient and lean, and that gave that confidence for offshore investors to actually invest in the Zambian market. And one thing that you need to also understand is the fact that offshore investors also want to make a gain on the positive sentiments. And how do you make that gain? Is to come in the market at the time these financial instruments, especially fixed income securities, such as government bonds and treasury bills, they are trading at a relatively lower price. So you want to buy today so that by the time the transition is over and the macroeconomic environment improves, you are going to actually start seeing these yields going down even further and the prices of Zambian securities going up. And that is a gain to an offshore investor. And it is more so important in the sense that with the expected appreciation of the Zambian kwacha, the offshore investor is making a killing on both sides. The currency is appreciating. The prices of financial instruments are expected to go up. So you have a return on both sides of the coin.
Doc, you did allude to one of the important documents, that spells out the agenda and gives an outlook in terms of priority for the new administration, which is their party manifesto. And what I'd like to find out from you, what are some of the key sectors do you think will be integral and critical in terms of driving growth?
So thank you very much. When you look at that document, you break it down in two phases. The first part is it looks at what are the key programs being proposed. The three programs that being proposed. The first one is the Economic Transformation Program. The Economic Transformation Program is basically the anchor of all sector policies that they are proposing to implement. And the other one is to enhance entrepreneurship. Remember, an economy without entrepreneurs is actually a dead economy. You need entrepreneurs to create more jobs. You need entrepreneurs to grow the economy. You need entrepreneurs to pay taxes so that public services can actually run. Without an entrepreneur base, the economy can't go anywhere. Then there is also the digital revolution. We are in the digital age, and the digital transformation is actually driving the business processes, and that is going to enhance economic performance and economic growth. Now, when you look at the sectors, there are quite a number of things that I picked out from there. One, there is an emphasis on agriculture. And agriculture, what is it that is being focused on? Is enhancing productivity. Of course, Zambia has been largely an agricultural economy, but productivity has been a very big issue. And that has kept the cost of our products relatively more expensive if you compare with other countries such as South Africa, making our maize relatively less competitive when you compare it with the South African maize. So we need to enhance productivity. Secondly, there's also a need to improve market access. And the document does mention that market access is very important. We want, what we would want to see is efficient delivery of products produced in Mwense, products produced in Shangombo, reaching the market centers in Lusaka or abroad. And that is going to give an income to the farmer. And the other thing that is being focused on is the energy sector. The energy sector is very critical to the growth of the economy. A few things that I pick from there is there is a need for reforms in the energy sector, especially targeted at inefficiencies in our state utility supplier, ZESCO, trying to make it more efficient to deliver the service. With more efficiency, we are likely to see the lower cost of service or the lower cost of energy for our producers. There is also a focus on diversifying the energy mix, a proposal to enhance solar and wind power and other sources of energy so that we have a mix so that we don't get affected should we have a weather shock like we had in some previous years where there wasn't enough rainfall and that negatively impacted our energy production. The manufacturing sector, what I've observed within the manufacturing sector is a big emphasis on improving regulatory burden. That is basically lowering the cost of doing business because it's very cardinal to attract foreign direct investment. It's very cardinal to encourage entrepreneurs to start business, and that is going to spur growth. We are also looking at the tourism sector. A very important angle that I saw is that the emphasis is on encouraging local tourism. The document does speak about trying to encourage you and me once in a while to plan for a holiday. It may be in Lusaka, in Livingstone, in Mfue. And that is going to reduce the negative impact that external shocks such as the COVID-19 may actually have on the tourism sector. The tourism sector is at the moment bleeding because it tends to depend so much on foreign tourists than local tourists. So with more incentives there, we should be able to see more activity in the tourism sector.
Doc, as we get to wrap up this conversation, in our last interaction, you did enlighten us on growth prospects when it comes to the Zambia economy. And what we'd like to find out following the transition that we have undergone as a country, you know, election-wise, what are the growth prospects? How is the outlook?
Thank you very much, Wenson. Again, if you recall, in our previous economic outlook, economic update that we presented, we did mention that, yes, we were expecting growth to be in the region of about 1.6% in 2021. However, one of the key things that we were putting in as likely events that could have a negative impact on growth was what we call the political risk. The political risk basically is a situation where a political event turns violence. And when you have violence, economic activities stall. Now the political risk is behind us, and that was really a big drag on our projections earlier in the year. So going forward, we've revised our growth projections from 1.6% to about 1.8% to 2%. And the key reason why we couldn't revise the growth even higher, it was because the period remaining, especially the transition period, is quite short for 2021. And what we are likely to see is we are going to see quite a number of changes which could only bear fruit into 2021, into 2022. And what we are seeing is that going into 2022, we might see growth return to levels that that will lead to growth in per capita income. Our projections for 2022 is that economic growth is going to be around 3.4 to 4%, which is relatively higher than the population growth of about 3%, meaning that per capita income will be growing going forward. Secondly, we are also seeing a slowdown in inflation going forward. However, for this year, our projections still indicate that we are going to close the year within double-digit inflation, but we are going to see inflation slowing down to below 20% per annum. And the key factors there again is we do have a bumper harvest this year, which is going to slow down the prices of consumer products such as mealie meal. We are also taking cue from the massive appreciation of the Zambian kwacha, which has so far gained in excess of 16% for 2021. And with more positive sentiments going forward, we might see the kwacha actually even appreciate more, and that is going to translate into lower prices for imported products. Another thing that we are seeing is we are likely to see the kwacha continue appreciating for the rest of 2021 going into 2022. Actually, our estimates, Wenson, do indicate that fundamentally the kwacha is undervalued, and the kwacha should be trading around 15 kwacha per US dollar, and we should see the kwacha drift towards that amount. But should we have a situation where there is heading behavior, we could actually see the kwacha even going below 15. But fundamentally, we should be trading around 15. That is what economic fundamentals are telling us. So we are likely to see that. We are also likely to see interest rates going down. We were just looking at secondary bond trading. At the moment, if you look at the 5-year bond in the secondary market, it is trading around 25 to 28%. On the primary market, it is still at 32%. So that is already a drop of about 5%. And when those things start happening, we are likely to see them translating into lower interest rates for borrowing for you and me, and that should actually drive even more investment, more consumption, and aggregate demand. So essentially, that is, from an economic perspective, that is what we are expecting to happen. So in other words, the macroeconomic environment looks relatively more brighter than it was in our previous economic update. Thank you.
Thank you very much, Dr. Patrick Cheleshe, who is head of economic research at Zanaco Bank PLC, and of course for providing us insight into the impact the just ended election will have on Zambia's economy at macro level. The name is Wenson Mavoro. See you next time.